You hear me, Karen?
We all need to log into Zoom for this, or?
No, I was just gonna put her on.
Can you hear me?
I can hear you. Can you hear me, Karen?
I can, yes.
Okay. And I think we are live. Dylan, I mean, Jim, can you go on YouTube just to make sure that we are live? I just want to make sure that we're broadcasting. It says we are broadcasting, Karen. I just wanted to make sure.
Yep.
Hey, there's two Karens here. Can you guys hear? Are we broadcasting? Yep. So Jim, Jeff.
Hold on.
Oh,
Yep.
there we go, Karen. We're good to go.
Okay,
So Jeff's going to start the meeting, and then we'll go from there. All right, Karen?
sounds good.
All right, 6 o'clock.
Yes.
I'd like to call the village board and Vernon Finance Committee joint meeting to order. Everybody please rise for the pledge of allegiance in a moment of silence. I
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. Open meeting law compliance check and roll call.
President Jeff Millies,
Here.
Trustee Jim Hirth is here, and Trustee Dylan Newman. Dylan, are you here via Zoom? So, Mr. President, you do have a...
Can you hear me?
Yes, you do have a quorum of your village board. You do not have a quorum of your finance. Lynn Gunn and Tom Tomasek are on the finance committee. They are here, but there is not a quorum of finance, which is not a problem. It's more pertinent that the village board, you do have a quorum, and you do have a quorum, and you're in full compliance with the open meetings law. And Karen Wolf from our Eggleston Son, our auditing firm, is here to present the budget. So, Mr. President, I will send it over to you, sir.
All right, let's have Karen Wolf, our village auditor, present the 2025 audit report.
Okay. So I had just spoken to Karen, and we kind of, we're going to be making a change to the audit report. There was an amount that didn't get transferred over from the project improvement, and Karen just ran the number. It looks like it's just over $1 million, $1,039,056. So what we're going to do is I'm going to do an adjustment to the audit report that you guys should already have. And that's going to be taking funds out of project improvement and doing a transfer into the general fund. So when we go through this financial statement, I'll kind of note where that you're going to see that. And then if you guys still want to approve the audit report with that change, you don't have to reapprove it once I make the change.
Right.
Or if you'd rather have me resubmit a new one and approve that, that's really up to you.
Oh, Karen, you want to go ahead and present, and then as we go through, you know, the budget itself, I'm sorry, Jim.
So everybody has a copy of this?
Yes, they do.
Okay. So on page 1 is the independent auditor's report. Again, this year it's a clean report with an unqualified opinion. So there is no issues that we noted that would be a material misstatement or anything of the financial. So that is consistent with prior years also. So this is, the verbiage is all the same. If you see on page 3 of this report, the last paragraph is new this year. Because of the Center Bridge project being federally funded, we have to apply government auditing standards to our audit, and that's just kind of looking a little deeper at the grants. If you would have had over $1 million in the federal grant, we would have had to do a single audit for the grant, but you didn't reach that barrier. So this is just an extra paragraph saying that we did audit this in accordance with government auditing standards. Again, there was no issues with that. It's just verbiage that we need to add because we did have to kind of change the audit just a little bit because of that. So then if we go on to page 4, this is your statement of net position. So what this is going to do is show your assets, liabilities. This does include all of your capital assets and your loans. There was about a $2 million increase so this is governmental activities. So this is your general fund, your ARPA fund, your project improvement fund, all combined. So your assets did go up about 2 million, and that was due mainly because of the project improvement funding, the loan, the 1.8 million that was taken out right at the end of the year. And then you'll see that down at the bottom, we have a net position of 5.9 million. Last year, we're at just over 5. So again, increase there was because of that, but then the increase in funds, but then you actually had expenses that offset those, the capital assets of the Center Bridge. So that netted out about $900,000 over last year. On page 5, you have a statement of activities. This showed a change of net position of $885,000. Again, about $830,000 of federal grants were recognized during the year, so that's going to show, like, you're going to see an increase because of that. So your net position at the end of the year was the 5.919. On page 6, we have the balance sheet. Now, this is one of the items that would be affected when we make this adjusting entry. So this, again, the balance sheet for all the governmental funds. If you see at the bottom, you see the fund balance, total fund balances. The general fund currently shows a negative $287,976. And the project improvement fund is showing 2.7 million. So what we're going to be doing is transferring just over $1 million out of the project improvement fund and into that general fund. So that would put you at a positive fund balance.
That was my biggest concern on why we had a negative balance in our general fund.
Oh, that was my biggest concern, is why we had a negative balance in our general fund.
Could you hear Trustee Hurst?
Yeah.
Okay, thank you, Karen. Thank you, Jim. He feels better now, Karen.
Yeah.
Right.
Because correct me if I'm wrong, but our policy states that we have like between 25 and 35% reserve, right? Which would equal to essentially between 1.1 million and I don't know what the exact, 1.7 million, say somewhere in that. Is that accurate?
I actually didn't look at that number.
Okay.
But that will give this a boost. Where is that at?
So it's
Well, we need 25 to 35% of the 5,031,000.
So minimum reserve would be 1.26 million, and then the upper target at 35% would be 1.76 million in our general fund, essentially.
Which in my opinion is too much money because you're not earning that much interest on it.
I agree. Sorry, Karen.
Oh, that's okay. I was just looking at that, so yeah, about 1.6 would be on the low end.
The high end. The high end, is this on?
Yeah.
The high end would be 1.6. The low end would be the 25%, and I think that was 1.1.
So you still will be a little shy of that, but it's going to look a lot better.
Correct. And then what is it? Do you guys have offhand the years prior, like 3 years prior? What was our general fund balance at the end? Was it?
Well, that's, I hate to state this, but.
Are
the
we
village's-
improving?
The village's financial position in 2023 was, let me just go back.
That was negative 313
We had all unaudited, we didn't have any
at the
bank
end of
debts.
23. At the end of 22, it was about a negative 400,000.
I see the 23 negative, yep.
Yeah. Okay, because
I
that
don't
would be a
have 24
problem if
though
that
in front of me.
continued. But now we have a positive.
Yes.
It'll just get better, Karen.
Okay.
Okay, so then on page 7, it's just a reconciliation that shows the difference between the governmental fund balance and the net position. This is where you see the differences of your capital assets, your loans, things that are on one report that aren't on the other. So this just reconciles those two.
And I'm sorry, Karen, were you still on page 6 with that?
Oh, that was on page 7, I'm sorry.
Okay,
Karen, when I spoke with Karen Shu earlier today, I had asked about that ARPA fund balance, and I thought that would be depleted by now, and I thought Karen said that there was some resolution that she had submitted to you or forwarded to you, that that money was supposed to have been transferred. Do I have that correct?
I was under the understanding that the remaining 180 was being used in 2026.
it is.
But there was no withdrawal of that ARPA funds during 25.
Yeah, we
Yeah.
used fire department funds.
Yep, there's 400 and
94.
some thousand that was recognized as revenue.
494,000 out of the ARPA funds for 25.
Yes.
Where does that show? I don't
That's gonna be on, you'll see part of that on page 8 under, it's actually revenues intergovernmental under the general fund. So that includes all the federal and state grants. So the federal money that was utilized is included in that revenue.
But when I look at the page 8, the ARPA fund has interest or investment income of 11,174, and there are no expenditures, so our fund balance actually increased by that 11,000 from 84,222 up to 95.
The revenue from that is in the general fund. You recognize the revenue in the fund that's the expenditure is recognized in. So since the general fund, you recognize that ARPA revenue when it's spent in the general fund. The ARPA fund is more of just like the holding fund,
Right.
so it stays restricted. So once that money comes out, you transfer the cash, or in this case, due to, due from, into the general fund where you recognize the revenue under intergovernmental, and then the expenditure in this case is going to be under public safety for the fire department. So you're not going to see that revenue under the ARPA fund, you're going to see it under the general fund.
But I thought the balance that we had in the ARPA fund as of the end of 25 was gonna be utilized in full to pay for the fire department salaries.
In 26.
Not in 25, to cover the increase in 25?
Yeah, we put 494 went in 2025.
Okay,
And then the remainder was earmarked for 2026.
okay,
It's 180 some thousand.
all right.
Yep, so you'll see that same thing next year, only this time it'll be 180,000.
Right.
And then the
Instead of
ARPA fund will be at a zero balance.
Yeah, and that's something that at the end of the year, you'll want to look at what you have in that interest income, and you will want to zero out that ARPA fund, and we can do that during the audit.
Yeah.
Okay, thank you.
All right, so on page 8 then, we are looking at, again, with the change that we're going to be doing. If you look under other financing sources, right now it says proceeds from issuance of long-term debt. So that shows that 1.8 million that went into the project improvement fund. There's going to be additional 2 lines there, and it's going to be transfer to and transfer, like transfers in, transfers out. So this is where you're going to see that additional 1,039,000 will be showing that as a transfer out of project improvement and a transfer in for the general fund under other financing sources. So that's going to give you, instead of a expenses over revenues of 128, you're going to be revenue over expenses of 910,000.
And Karen, you have the number of 1,039,056, correct?
1,039,056.
Yes, okay, perfect. I just want to make sure our numbers jibe.
Yeah. And You
why
said
would-
you could email me
Yep,
that, and then if you guys do a resolution too,
yep,
send me that, so then I'll make sure I'm doing the right amount.
okay.
Could you just give me,
So, just a couple things to note. We're gonna kind of go through this a little bit more on page 40 because it breaks it down better for us. But the capital outlay was up about 1.2 million from last year, so you get a big jump there. But at the same time, your revenues were up 1.1, and that again is mainly from that ARPA 480,000 that was utilized. Plus, there was about 500 to 600,000 of federal money that you guys will be receiving that got booked for that Center Drive project, the bridge.
Karen, Jim has a question?
it goes
Oh, yeah,
back
go
to
ahead.
it goes back to the project improvement fund. So can you just give me a brief overview, anybody, on like why are we transferring money out of there? How did the money get in there? Where did the money come from? Is it normal to transfer that money into a general fund? I just don't understand.
Well, I'll give him there was 2 loans that were done many, many years ago in that fund, and then this last year, at the end of the year, this board borrowed the $1.8 million. And it went into that project improvement fund, and what we're doing now is the money we've spent, we've actually spent this $1,039,000. We've actually spent that money and we want to take it out of the project improvement fund and put it into the general fund where we spent the money. So the electors can see,
Okay.
if they look at
So
our.
basically, my biggest question is we're not just robbing. It's not robbing Peter to pay Paul. There's actually a surplus of money in the general fund.
This is all our money.
It's not borrowed money. That's
Oh, yes, the project improvement fund is all borrowed money.
so. Are we?
And you will have to make physical transfers from the project improvement fund bank account into the general fund as you're paying those bills.
And
Like, I think you probably utilize some of the general fund already. But you will have to transfer cash as needed, especially as that Center Bridge project continues.
And there's no municipality, unless they don't do any roads.
Okay, so-
There's no municipality that does not have to borrow money, because you can't levy that to taxpayers to pay for roads.
Right. So I'm trying to word this correctly, like ask my question correctly. I'm just kind of curious. I don't know how it works. Seeing that, is that normal to transfer money like that, or should your
Yes.
general
Yes.
fund be in the positive?
But that's
Before-
that's what we're doing. That's what we're doing with this transfer.
And that's
is
a-
making it positive, because we actually spent the money that we said we were gonna borrow it for.
So okay, so we spent the money, say for Center Bridge. Say we how much did we spend this
We
year?
haven't spent, that's for Center Drive.
Center Drive. So arbitrarily, right? We redo something and we spend $1 million out of the general fund, right? That's where it would come from. This money, you're just replacing that money with this money from this project improvement fund, as if
Right.
that's what it's for.
When-
Okay,
yeah.
okay. So we're not
It's like
just
a holding. When we borrow the money,
a
we
holding.
hold it in that account until we spend it, so.
and then you transfer it over.
That's correct.
Okay,
Sorry,
that
Karen.
makes a whole lot more sense.
Yeah, and you guys were very specific in that loan document and the board resolution for that loan on what exactly those projects were.
Right.
So I think there's a couple of them that haven't occurred yet in 25, so we're not transferring those funds until 2026 or when those expenditures occur.
I guess you don't transfer that money until after the audit, or could you have transferred it before?
We could have done it in 2025.
Okay,
but
I was just kind of
But we
confused.
also can do it in 2026 for 2025,
Okay.
and that's what you'll do at the next board meeting. Tom's got a question too, Karen?
Yeah.
Yep.
Karen, when I look at the capital expenditures for 25, the total is 1,371,002. The 3 line items shown on page 8 for capital outlay: general government 58,000, public safety 500,000, and public works 812,000. I thought that majority of our capital outlay is paid for through the debt service or through the borrowings. And I was surprised that you're not transferring this full amount to cover the capital expenditures.
What page are you on?
Well, some of those capital expenditures weren't in that loan amount.
These 2 amounts, the capital outlay.
So that's
Page
kind of what, Karen just did. We kind of looked at those numbers quick. So I think you said there was something that you knew of that hadn't been utilized, but some of the capital outlay isn't financed through project improvement. It's gonna be financed through just taxpayer money.
Operations, right, okay.
Yeah,
I thought we covered majority of our capital expenditures through the borrowings.
Except for the bridge. The bridge, we have not gotten it, and then the generator. There's only two items that we haven't spent money on, that we borrowed for. We also borrowed money for the expenditures in 2025 and 24 for all the legal and engineering that weren't part of
The bridge project,
the grant.
okay.
Okay, Karen?
okay.
Still confused, but you and I will talk.
Is there another question?
Nope,
No, go ahead.
we're good, Karen.
All right, so then we will go to page 9, and again, this is just a reconciliation, but this time, this is a reconciliation of more or less the income and expenses. So this, you're gonna see the capital outlay expenses that you had of the 1,371,000, your loan proceeds of the 1 million. So in some of the, on one of the reports, those are recognized as expenses and revenues. On another report, they're not. So this just reconciles those two changes in fund balances. And that's one of those things specific to governmental accounting. Page 10 and 11 are just the statement of changes in fiduciary net position. This is just you collecting the taxes. Nothing special about these. This just takes into consideration what you had collected at the by the end of 2025, and then what you had paid out in 25 to the other governments. On page 12, then, this starts the notes to the financial statement. These are very similar to prior years, so I'm not going to go through all those. There are a couple notes I just wanted to make. On note 1, the first paragraph, there was a new standard, statement number 102, that was issued by the GASB, the Governmental Accounting Standards Board, called certain risk disclosures. That's something we are aware of. There is nothing within the village that was applicable to that, but we do just want to state that that was implemented by you. It just had no effect on your financial statements or your financial report. So then there's nothing else different. This is all just general information about the village. No specifics. If on page 19, you will see that equity classification that we're just talking about, where it shows that fund balance of 25 to 35%. It's about the third paragraph down. So then we go on to note 2. So now we're going into notes that are just a little bit more specific to different accounts. These are all required by GASB. If you see on page 20, there is quite a large amount of restricted cash and investments. This is the project improvement fund. So this will be changing also. That'll be going down about $1 million. So you're taking restricted cash and you're going to be moving some of it to the general fund, so then it becomes unrestricted. So you'll see a change there in that restricted versus unrestricted amount. Those will just change $1 million both ways. And then on page 21, you'll see kind of a summary of your restricted assets. Again, you're going to see about $1 million decrease in project improvement. This, you might know, I don't know if anybody, I know Tom noticed it. Last year in the financials, project improvement fund was not in this report, this little note, and it should have been. So this year it is included. And then on the bottom of page 21, it also talks about other receivables. Normally, you guys don't have a lot out there. This year, there is just over $700,000 in receivables, and what that is the amount that was calculated for the amount of federal and state funding that you guys should be receiving, like the 80% that you should be receiving from that Center Bridge project. And you hadn't received any of those funds in 2025. So what I did, it was I booked that amount as a revenue, and then it becomes an accounts receivable at the same time. So that's why that amount is so high this year. So I'm not sure if you guys, what funds you've been getting. I'm assuming you've been getting those funds in now in 2026
For the grant?
for the Center Bridge project?
No, we haven't received anything, Karen.
No funds yet. So yeah, you probably don't know.
And they indicated when the whole bridge project started, that's typical, and they also indicated that the contractors will probably have to wait till the end of this summer to get their money. But they said that's typical funding, federal funding, because the federal and state are working together, so they indicated, Karen, that's typical, so, but as soon as we start getting that money, you'll be the first to know
Yeah.
after the board.
So have you been, I think it's, have you been paying out though for these expenses as you're incurring them,
Yes,
correct?
yes,
Yeah.
yes, we have.
So yeah, well, I mean, hopefully by the end of 2026, that money comes in. If not, if it's still outstanding, we'll make sure to calculate the amount that's outstanding and make sure we book that as revenue in 2026. So that accounts receivable might go up either higher, or if you are getting payments in, that might get reduced.
Sounds good.
So then nothing really different on page 22. Everything's pretty much the same as prior year. On page 23, this shows your capital assets. So this just shows the changes in those assets from prior year to the end of the year. The biggest difference here is you have construction in progress, which increased about $736,000. That is that Center Bridge project. And then you also had additions of machinery and equipment of just over $600,000, and that's going to be that fire department equipment. Department of Public Works got like the road widener or the shoulder. So that's what you see there as the main additions.
Okay.
On note 9, you see your long-term obligations. So you do see under governmental activities the addition of the $1.8 million loan, and then it shows kind of like what you're going to owe within the next year. And then you have you have general obligation debt of just shy of $4 million at the end of the year. And then after that, we do kind of have to report other long-term obligations that aren't loans. So you have your compensated absences, your net pension, OPEB, and pension liabilities. So that just kind of is to give the reader an idea that yes, you still have other obligations out there that aren't specific to loans. Just a little more breakdown then on the bottom of the page of those notes that are due, those loans that are outstanding. And then on the top of page 25 gives kind of the debt service requirements for the next 5 years individually, and then it goes in 5-year chunks after that. So by the end of 2036, you guys can be debt free.
Sorry for laughing, Karen.
I meant it to be humorous.
I got it.
On page 26, we've always shown the leases that you guys have for the revenue for the towers that you guys rent out. You did have a new copier lease that you guys signed in 2025, so we do have to have a little note regarding kind of what those lease commitments are for the next 5 years. So you see that there. They're nothing substantial, but that's something that it's new this year because that lease was just signed in 25. And then from page 26 through page 34, this is all regarding the Wisconsin retirement system, your pension plan and your OPEB plan. This is all language derived directly from the state. I don't think it's worth going over anything because the main thing is the 6.95% is what you guys paid as a match for general employment, and then the protective was at 14.95. everything else really is just actuarially computed through the state. So I'm just gonna, unless anybody has questions on that, we're just gonna kind of
And that-
pass through that
and
and we'll
Karen-
go on.
Karen, that's required to be in our,
It is.
okay.
Yeah, yeah.
Yep.
It's required supplemental information.
Yep.
And the state does give a lot of information. I mean, that's where we get all the information from, is the municipality-specific info that they provide. Note 14 on the top of page 36, commitments and contingencies. There is a paragraph that just talks about the contract that you have with the Wisconsin DOT for that Center Drive Bridge project. Just gives a little bit of, estimated about $2 million, 20% is funded by the village, 80% paid from state and federal funding, and then it just says that you have approximately 1.165 million remaining to complete that project as of the end of the year. And then page 36, the note 16 just kind of replicates what we saw earlier in the statement of net position. And then on page 19, we do have just a little note if there was any funds that had expenses in excess of the budget, and the only one this year was the leisure activities, was about 12,000 over budget.
Did you say page 19, Karen?
No.
Oh, note
Oh, I'm
19 on
thinking-
page 38, I'm sorry. So then next after that is the required supplemental information. This is information that is required by GASB. And this is where you kind of get more of a breakdown, a specific breakdown. The first report is the budget versus actual. So this just gives a better breakdown, I think, of like intergovernmental. You see the federal grants. You had, I think, budgeted 1.9 and actual was 1.5.
1.15.
1.15. Yes, I'm sorry. So this just gives kind of a better idea of where you're at. It's broke down by category better. So for overall in expenditures, the main difference was your professional service expenditures were down about 90,000, which had a lot to do with the legal chargebacks being down quite a bit in 2025.
Yes.
And then also public safety, public fire protection was up a little over 300,000. The expense there, which mainly was salaries and the benefit packages. It looked like changed in 25. So people who used to be almost like more people were on staff. I think that was part of your way of keeping the employees.
Well, for the fire department, yeah, they secured Wisconsin retirement. They qualified for that benefit, and they were given just like any other employee would. It's applied equitably based upon their service requirements of WRS.
Yeah. So there you saw about a $300 increase. And then the other one to note, under public works, your streets expense was down about 100,000, but you guys didn't do any seal coating or overlaying in 25. So that was the big difference there, because that's not a capital outlay expense. That's normally just a regular expense, and there was nothing budgeted or done in 25 for that, where there has been in previous years. I think your focus was on that Center Bridge.
Right, and then we did the road approaching to and leaving, both approaches to the Center Bridge were done in 2025. So we had our Center Bridge project, the 20% of the federal grant, and then we had the Center Road project that we could not do when we did Center Road 5 years previously because of all of the permitting through the DNR. So we did do, and I did in the grant, I did write some for the street, but they only gave you so much and we needed more. So that's where the 483,000 comes in.
And then on page 41, another note, your capital outlay was up about a little over $1 million from prior year. And again, we've talked about that being the fire department and then that Capitol Bridge and Capitol Drive project. You will see a change in this report also once we make the adjustment for that $1,039,000. So again, under other financing sources where you see the proceeds from long-term debt, there'll be a couple more lines there, transfer in, transfer out between. So you'll see a transfer in for the general fund here of just over $1 million. So that's going to carry through down and give you that positive fund balance at the end of the year.
So for the year of '26, Karen, under other financing sources, we had been showing the proceeds from long-term debt under the general, and that should be under the project improvement fund?
Yeah, if you're taking out a loan for project improvement in the budget, that should go under project improvement fund revenue.
Okay.
Yeah. And then on pages 42, 43, 44, and 45, 46, and 47, 48, and 49, these are the required notes to the required supplemental information notes about WRS. And again, it's all stuff that we get from the state specific to the village of Vernon. So that's just rehashed in there.
Karen, on page 43, for contractually required contributions, I noticed that ours went from 24 from 36,382 up to 91,058. So that was primarily because of the additional
Fire department.
the fire department WRS. Okay.
Yeah. And they are protective service, so that's a higher,
Much higher.
instead of 6.95, you're paying about 15%.
Yep.
So, yeah, so that made quite the jump. And then on page 50, this just breaks down your two non-major governmental funds, which is your impact fee and your stormwater. These were very consistent to prior year. No big changes there, nothing to note. And then on page 52, this is a new report for you guys this year, just because it is a government auditing standards required audit. I don't know if any of you remember in the past, we normally send 2 letters out with the audit. There's a governance letter, and then there's a management letter or significant deficiency letter. This part of the report takes the place of that significant deficiency letter. So this just kind of says deficiencies in internal control can be either material weakness or significant deficiency. Similar to last year, you had the same 2 findings, segregation of duties and preparation of annual financial reporting and adjusting entries. These are very standard findings. Every municipality that we audit has the same findings just because you're so limited in staff. And I did talk to Karen and we looked at, talked about the view of responsible officials and your planned corrective actions. Everything there is valid, seems good. But this is a new addition to the report this year because of that government auditing standards that we need to follow. So any questions?
Nope.
Everybody's shaking their head no, Karen, you did a good job.
So Karen, if you want to send me that
Yep.
breakdown, on Monday I'm not in tomorrow, but on Monday I can make those adjustments and then I'll send you an updated report as soon as that's done.
Sounds good.
And then we'll also file the amended Form C too.
Oh,
'cause
that's,
that'll
yeah,
be changed. So,
that's good. That's good.
okay, well, thank you, everybody.
Thanks,
you.
Karen.
Thanks,
Have a good
Karen.
night.
Yep, you too. Bye-bye.
Bye, Karen.
So that was a pretty clean audit,
Yeah.
essentially. The debt's still low, compared to the limits, it's 5%, so that's good.
It's very good. What is
Even
our-
with the 1.8 million in, added debt, that's
Right.
still, you're still at 5% of your allowable.
Right.
So that's excellent.
And you're saying Big Bend is exceeding their, or posted next month?
I think they're right up there. I think.
They are?
I have that formula, so we'll bring it to the next board meeting, what we could, and no board member, whatever, want to get at the level of borrowing that we could borrow, but we're in that,
Yeah, what can we borrow? 79 million, I think, is the level.
I thought it was,
It's up there, yeah.
yeah. And
Keep it at that 5%.
Any government, there's no way you can levy for, the project, especially roads. Although Jeff did have one gentleman from the village of Vernon ask for his taxes to go up so we could repair more roads, so,
Which was the first.
yes, that was a first, so.
Yeah, I was just a little concerned about that negative balance. I didn't
Well, that's what
understand.
I talked to,
I didn't understand.
Well, and the only reason I did talk to Karen and Tom earlier, because we actually spent the money that we borrowed, and because we've done that, boards have done it in the past, that they've done a resolution moving that money in this year for last year, and that is Gatsby standards. So at the next board meeting, what we'll do is a resolution to move that money.
Yeah, well, then I heard that, and I kind of was like, whoa, what are we, robbing Peter to pay Paul here? But
Yeah.
now it makes sense.
Yeah,
It all makes
right.
sense.
Usually you don't want that much money in there because you're not earning that much interest, and that means we would apply that money towards a loan, so we have to borrow less.
Right.
You know,
It just,
so-
well, we have, the policy is what were you have a policy in place to have that much.
Well, and the reason the auditors are recommending that, there are municipalities that run out of money at the end of the year, and that contingency fund, because you never know what's gonna happen in a year's time, so most auditors do recommend you to have a substantial contingency
And usually there's some
fund.
type of catastrophe, like the tornado hits the building, well, that would be all a capital expense you can borrow the money for. It's
Could you-
not where it's-
So are you saying, or is it like you keep that money in a separate account that earns higher interest? And then if need to be transfer, is that?
No, you keep it, you put it in the project improvement fund, so the
Is that-
board and the public can see that the money went in there. And then as it's spent, then we do resolutions indicating, we spent, and that's what I'll do better track of this year, is anything that we're spending money, we're still waiting for the part for the generator. We've done everything in our power to do that, but if the contractor's waiting for that part for our generator, that's what we're waiting for.
but if you do ever have any excess cash, could you pay down like the Citizens Bank loan, Rudy?
Yes, and Citizens Bank, I'm pretty sure the money
Is
we
that-
borrowed from Barrett also has that clause that if you wanted to prepay.
Because one's at,
Pay theirs and you're paying
Yeah,
Citizens 5%.
I was just
Right.
gonna say, one's at 1%, right? The two are at close to 1,
Right.
and the other one's at 5, right?
yeah, it's a different borrowing time.
Yeah. And then, yeah, okay.
And I don't know if you ever look at your cash that closely to see if you have any real surplus in the cash account. Because if you do, you're not earning as much as you're paying 5% to them,
Right,
so.
right. I know Terry too, our treasurer, he watches that. He also watches if other banks offer,
Refinance?
what the different, what they're giving interest on. And they also factoring the fact that, not that I'm just plugging for Citizens Bank, but Terry and I also discussed Citizens Bank collects our taxes. And the tremendous amount of risk we have collecting it here versus at a bank, it's night and day. And
But they're getting a fee for that, right?
a $1 per parcel.
Oh,
So that's well worth, that,
And we have how many tax bills go up,
like
roughly?
over 3,000, like
So there's-
3,300.
three grand, that's,
Yeah. I mean, we've been hearing before where people come in, bring it in dollar bills because they're angry. I mean, so you're sitting there with thousands of dollars of, that hasn't happened with Terry here, but, I mean, it's a good, that's a great service. That's
They
why,
just brought in nickels,
yeah. That's why Citizens Bank, they offer it, there's so many municipalities that do it through Citizens Bank in this area.
It's a good service.
Right.
I guess my one concern is that we try and transfer our cash in the year that it's expended.
Right.
So we try and watch that closer, so.
Right.
we wrote that
Little
money in
cleaner.
December,
Well-
But we didn't make the transfer, we're not making the transfer.
And
in
here's the
December.
other issue, we already ordered the fire truck and had, so there's equipment that will, but we haven't borrowed that money for 2026 yet. So that's the other thing.
So
So,
the fire truck was coming out of one of the funds, wasn't it?
Yeah.
Yeah.
Yeah, then,
So we weren't really
yeah, we were
borrowing.
moving the remaining 928,000 from the promissory notes that we took at the 1%. But we still should, we'll do a
yeah,
resolution
the-
to move that.
To show, yeah.
And the
what-
DPW, the fire truck, that we had ordered a DPW truck and a fire truck this year.
hopefully we get that fire truck soon.
Well,
Yeah, I thought we would've had it by now.
It's still on tour.
What is that deal with Waterford? That we split the cost of some vehicle and we're paying them, or we paid them something, there was
They-
a note in here,
they paid us $75,000.
they paid us.
They were
Oh,
using
yeah.
one of our old
They-
vehicles that we really weren't
I thought
using.
the way I read this is that we paid them something.
No, we never
some years
paid.
ago.
No.
That's not what the note says.
And what page are you
I
on?
don't know.
Oh. Yeah, we're moving 928,800 from the project improvement fund. But the stock fire truck was 987.
9 or 814?
No, 987.
Oh, I thought it was 814.
Yeah, the truck was down.
It was 814 and some change is what we had in our paper.
On page
Oh, I'm,
30, on page 37, note 18, in March 2018, the village of Waterford, oh, okay, you're right, I read this wrong. Paid the village of Vernon 75,000 for this shared
Yeah.
ownership.
And now it's in the shop. So we're down to,
is
Our
it that
backup.
fire truck that's being repaired?
huh?
Is it that fire truck
Yeah.
that's being repaired?
The brake drums fell off. The pump was fried.
I'm sorry, I was looking at, the 987 was for the bunker gear, protective clothing, and the mobile computers. So we budgeted 900,000 for that fire truck. That's what we, that's what
Oh,
we-
yeah, and it came down to 814 or something because they gave us
Right.
some discounts for the trouble with the old one, I think.
Well, and then Alex negotiated on
Yep.
something that,
Yeah,
that wasn't, that we'd have to pre-order, and, because when you have to build all those specs, you're,
Yeah, over $1 million
Right.
easy. You can add.
3 years waiting.
Yeah. So hopefully it comes soon.
Yeah, I thought we were supposed to have it. by
He said he
now.
was going to call him. So hopefully
we'll get a report.
we get a report, yeah.
So, Mr. President, is the board making a motion to approve the 2020-25 audit with the $1,039,56 added to that audit
With that change.
with that change?
I'll make that motion.
I'll second. Oh, go ahead.
Go ahead.
He's not on the board. You have to second
I'll
it,
second.
or Dylan.
Any discussion? All right, hearing none, all in favor of the motion?
Aye.
Opposed? Motion passes unanimously.
That's it? Are you gonna adjourn?
Motion to adjourn?
I'll make the motion.
Second.
All in favor?
Aye.
Meeting adjourned. Thanks, everybody.
Thank you, gentlemen. Let me just end this here. And I'll shut this off and shut.